Hi everyone, welcome to the Timing Research Show from May 2nd, 2016. My name is David Kosmeter, I'm the creator of Timing Research, and today we will be looking at the 136th weekly report from Timing Research. So if you haven't had a chance to take a look at this yet, just go to TimingResearch.com and you can find this or any past report there. Today I have Hanna back as the moderator, so I'm going to go ahead and turn it over to him.
Hi, David. Thanks. Nice to be here again. We got a whole bunch of traders here today, so this will be fun. You get 5 traders in one room, bound to get some disagreements. So that'll hopefully make it interesting. Let me start off by going through everybody here, and I'll go in the order that I have written down on my sheet in front of me. Actually, I'm going to skip over Andrew. I'm not sure if he's hooked up yet. So I'll jump to is it Sang Lucci?
Yeah. That is
okay.
it. You got it right.
All right. So Sang, can you tell us a little about yourself, about your trading, about your website, sanglucci.com?
Sure, absolutely. Right now, we currently focus predominantly on options. We currently have a chat room that is filled with futures traders, equities traders. We monitor a lot of options order flow, aggressive activity just in the option space to find tradable opportunities, as well as set up swing trade, position trades, those kinds of things around the trends in the markets. I started out as a prop trader way back in 2005, 2006, and now just trading predominantly options, both buy side and sell side.
All right, great. So we'll get some interesting perspectives from you with the options built to it. So that's great. Sam, I'm going to butcher your last name, maybe Bourgi?
That's right. Hey, you got it right.
All right, I'm doing okay. Of TradingGods.net. So, Sam, you want to give a little intro on yourself and on Trading Gods? That'd be great.
For sure. So, I mean, I have a background in economics and policy research, so I come from the fundamental side, and I've been doing a lot of work around sectoral analysis and stock market analysis on the large scale. At TradingGods.net, we're mostly devoted to providing training resources around volatility as an asset. So we're actively involved in introducing new and experienced traders to volatility, and we have a VIX trader program that allows investors to better capitalize on volatility and trade the VIX index as well as the various ETFs. So TradingGods.net provides a whole bunch of resources around the VIX, and it's really our major focus, and we hope that people would enjoy our content there, and it's a pleasure being here as always. Thanks, guys.
All right, thanks, Sam. Now, is it primarily the VIX ETFs and ETNs that you look to trade there, or you do also do futures or options on them or things like that as well?
Yes, we do everything VIX, so options and futures for sure, and we're mostly right now involved in the VXX and the XIV, but the option side as well.
Okay, interesting. And then we got Jim Kenney, of Option Professor. I'm guessing, Jim, that you do some stuff with options.
Yep, that's what we do here. As far as what I do is I provide the content for the Option Professor and the DVDs that they have. And basically, the focus is the learning of all the different strategies and what the use and the risk of each strategy is. Because a lot of people have opinions on where they think the market might be going, but they may not know all the different tactics that can be used to put that opinion into work, and then what the use and the risk and how you might trade it after you put it on and all those kind of things. What's available as far as rolling up, rolling down positions or repairing positions and all that kind of stuff. So there's a lot to learn, and so what I did for Option Professor is put all this stuff on DVDs, and that's what they offer and that's what they bring to the table.
All right, great. And then lastly, we have Andrew Keene, who just made his grand entrance. Andrew, why don't you tell us a little about yourself and Alpha Shark, please, if you can?
Yeah, so I started AlphaShark.com about 4.5 years ago. It initially started as KeeneOnTheMarket.com. I was a floor trader at the Chicago Board Options Exchange as a market maker in 3 different pits. And then when trading got very electronic, I could say almost all electronic, I moved upstairs. I launched a live trading room where we have 6 moderators that run trading with their own capital. We have futures traders, we have a VIX trader, we have an earnings trader, and I specialize in unusual option activity. We also have 14 educational courses on demand in DVD, and we have about 4 proprietary thinkorswim indicators for day trading.
All right, so we got several options guys here today, so this will be interesting. I don't do a whole lot with options myself. I'll give you a little bit of background on me. I'm Rob Hanna. I've been trading full time since 2001, I think it was, 2002, and in 2008 I started a site called QuantifiableEdges.com, and I've continued to post to a blog there. I have a newsletter and some other things on the site. Additionally, I started a site called OvernightEdges.com in 2012, and then about a year and a half ago, that was merged with a site called Master the Gap to become InvestiQuant. So right now, I work with InvestiQuant as well as Quantifiable Edges. My focuses are swing trading, primarily indices and stocks. And I also do some overnight trading as well, so that's between the close today and tomorrow's open. But we'll be focusing mostly on swing trading here today. You can tell that this is a group of real traders because I am the only one willing to show what I'm wearing right now. The rest of them are all either shirtless or with baseball hats on.
That is exactly why I am not sharing my screen.
And when I first came into the room, I noticed how terrible I looked, so I was a little late. I had to run up and do my hair because I'm a real trader too. So what little hair I got, I had to do. All right, so let's get into the questions. I won't go in. I'll go top down to start, and then maybe we'll reverse it on the way back or mix it up somehow. But let's start with Andrew. You're at the top of the list, I think, Andrew, because your name starts with A. First question is, based on any technical or fundamental indicators you want to use, would you predict the S&P is going to move higher or lower from today's open until Friday's close? And then I guess, why or why not, using your indicators.
Okay, I've been bearish for a little while here. I think the market's pretty overbought. I especially think oil is overbought. So I actually put on a bunch of short positions through the option market in Rio, Freeport Mac, BHP, BP. So I think the market's going to roll over. I think that we got to 2100, and then there's just too much overhead resistance. I think the only reason we're up today is because it's the first day of the month, and we usually see buyers on the first day of the month, usually the first day of the quarter as well. One thing that's really interesting is we do see oil starting to pull back, and within the last, about year, oil's been trading with the market, and it's interesting to see oil lower with the market higher. So I do think the market's going to sell off. I think we need to test a lot lower. I think we test 1800 by the end of the year, but short term, I'm bearish to neutral.
Okay, interesting. Yeah, first day of the month strength is something I've looked at a lot in the past too, and I actually. In the past, I've broken it down by month, and I found that May is the strongest of all the months as far as May's first day for being bullish. And you also get some advantages if you come into it when you've had a few days of selling. But yeah, I certainly see what you're saying there. Oil, have you seen? I don't track oil closely. Have you seen it being the correlation being reduced a lot lately, or is it just today you're seeing it?
No, just today, and we hit that relative strength index above 70 in oil on the 28th, and that showed obviously overbought conditions. And ever since the day that Barron's came out with an article that said oil's going to 18, it's gone up almost every single day. Any pullback's been bought. So I just think a lot of these oil names are overbought. So I put on option positions till June in them, and I think that the market's going to roll over. I think oil leads the market lower.
Okay. All right, good. Sang, let's go to you. What are you looking at for this week between today's open and Friday's close, and what indicators are suggesting
You know, since I've done this call, I've been pretty spot on, more or less as far as flat and being long. This week in particular is a little bit more difficult for me, simply because of the sell-off that we had last week. So it's a question right here: is if we can get back over SPY 208. I'm actually bullish. As much as I would love to see oil take down this market, as Keene just suggested. And I would love to short the crap out of everything. I actually think we're gonna stay flat here. If we get back over SPY 208, we might start some bullishness. So I'm gonna go neutral here with the percentage of I would throw 60% out there because honestly, I am not that confident in direction right now. So I'd like to stay neutral.
Okay, so you're neutral, and I'm sorry, Andrew. I didn't ask you your confidence. What's the probability you correctly predict this week's move as being lower?
I will say 58.5.
All right. That's not a Fibonacci number, though.
No, but it's under 60. I'm not 60% confidence. Under 60, but above 50. So that is good.
Okay. And then let's move down to Sam. Sam, what are you thinking for this week? Higher or lower, and why do you think?
So, I mean, I share a lot of Andrew's sentiments there. I am bearish to neutral on the S&P 500. I think that the market has tried for new highs repeatedly for the past little while, and every time it's tried for those new all-time highs, it's failed. And I think a lot of us are expecting some kind of reversal or trend reversal. It's kind of difficult to predict exactly when that's going to happen. But oil markets actually, I mean, there was just a report today that OPEC is producing at near record highs, I believe 32.64 million barrels a month in April, and that's going to factor in somehow. I mean, if you look at some of the comments by some of the major banks over the past week, forecasts are all that oil prices are going to go lower. So that's always something to keep in mind. I think that if oil goes back to $40 a barrel, you'll see more of a coupling between oil and equity prices. So that's one thing I'm looking at. Also, the VIX volatility index last week, the VIX actually rose by around 19%. And as some of you are aware, the VIX and the S&P 500 are inversely related about 80% of the time. So the more volatility in the market, obviously, the more likelihood that we see the S&P 500 decline. I'm not expecting huge losses this week. I would put my confidence at around 55 to 60% that we do end the week on a lower note.
Okay. So no one's giving me 90% here, but we still got Jim to go.
Mm-hmm.
Come on, Jim.
Well, I think the reason everyone's at 50-50 is because we have some resistance at last week's high of 2105 on the S&P, and we have some support down there at 2050. And then when you put the market right in the middle of those two numbers, it's a little bit of a crapshoot which way it's going to go between now and the end of the week. That's probably where the 50-50 is coming from. On the possibility of it drifting higher, transports are up today 69. That's not a bad thing. The dollar dropping might not be a bad thing because there could be talk in the paper about the multinationals doing better with a weaker dollar. And then the VIX seems to be drifting lower, which is not terribly bearish either. So, if you had to make a call on a guess, I would say it may be drifting higher with resistance at 2080, which is not a heck of a lot higher than we are now, and of course 2105. And then, of course, if something comes out newsworthy to get people to run for the exits, that's why the rate on this is going to be 50-50. But with the transports up, the VIX drifting lower, and the fact that we did have the sell-off, and people are still how much are they believing in the second half economic pickup? If they're still believing in that, then they're not going to abandon stocks right away this week, I don't think. So we'll have to see how it goes, but that's how I see it.
All right, great, Jim. So we got two bearish, or bearish to neutral. We got two neutral to bullish, and I'm here to throw myself into the ring with a bullish for the week. Some of the things I'm seeing, like you mentioned, there's the early month strength, or Andrew mentioned that. There's not, we're oversold based on the sell-off of the last few days, so very short-term oversold. in a longer-term uptrend, and generally you get a little bit of a reversion when that happens. So I could see us bouncing here. We did go down and make the SPY, it was SPY or the SPX, can't remember, but one of them, if not both, made a 10-day low last week for the first time since February. And generally, when you get a pullback to a low like that during an extended period of a rise, the first pullback isn't necessarily the one that turns into something terrible. So I expect we'll see a little bit of a bounce this week. I don't have great confidence over the longer term. Seeing negativity from seasonality, from Fed action, and so forth. So we'll see what happens after that. But I'm guessing between today's open and Friday's close, we'll be higher, and I'm going all in with a 61%. I'm doing the Price is Right move on you guys, and saying 61% confidence. So I will note that the Timing Research crowd forecast prediction is that there's a 64% chance that we close higher based on the analysis that was provided in the report, and that was largely because we had a lot more bears with confidence this week than bulls, and so that's going against the crowd a little bit, is what the letter's suggesting. I kind of jumped ahead and did question 3. We did a 1, 2, and 3 all together here. If there's anything else you want to add, we'll get into question 4, and then if there's anything else you want to add as far as thoughts on up or down, reasons for up or down, please go ahead. But maybe we'll go in reverse order this time. Jim, yep. What indicator influences your trading the most? So what things are you looking at?
Well, I mean, here's what I think is important right now. And obviously, you know, there's going to be, with 5 guys are going to have different opinions, but I think 2 things are really important right now. Is that the Bank of Japan kind of threw the stimulus thing out the window, and obviously you had about a 5% move up in the yen, and you had about a 10% move down in the Nikkei. So that's obviously some significance in the short run here. The other thing that I think is pretty significant is commodity inflation. You know, you got oil had a nice big run of about 70% off its lows to the high of last week. Soybeans up 20% in the last 6 weeks, and gold up 23% from the Q4 lows. So clearly there's been a bid in the commodity sector, which is a little bit of commodity inflation. And that might be one of the reasons why the 10-year note, you know, deteriorated here today a little bit, and maybe there's more deterioration down the road, who knows. But oil, you know, like I say, had that big run. It's backing off now. Clearly, last week's high is something that it may have a difficult time in the short run taking out. But you know, that may have an effect on how people you know, perceive the markets right now, because if you can't get through this 2135 area, which is now getting to be a year old, and the commodities or the other things that have been beaten down so badly are turning up, maybe there is an exodus between now and the end of the year, exodus out of stocks and into other things. You know, only time will tell. But I think that's a big thing to worry about on a bigger picture, and maybe you know, consider making adjustments if you think that that's the way it's going to unfold. But I think you know, right now, the inflation that has come back into the commodities, which hasn't been talked about very much, and the dollar dropping from the 101 area down towards 92. If you look at the weekly graph, you know, if it got underneath this area, you know, going to 90 or 85 on the dollar index is certainly not off the table. It's a little bit oversold down here. They might be sucking people in on the sell side, but clearly the moving averages and stuff like that are not looking very good for the dollar.
Okay. I like your answer, because you looked at it a little bit differently than most people looked at the question. So I think we should do this both ways. So those are the indicators you're looking at now, meaning Bank of Japan, commodity inflation, dollar dropping, stuff like that. is there so those are the most important ones right now. Is there an indicator you look at consistently, whether that's a technical indicator or a fundamental indicator that influences your trading
Well, I think
on a
you know
consistent
the
basis?
the market has ranges that it sets up, and then it either contains in those ranges or it breaks out. And then the
Okay.
VIX, obviously, is something to that I watch. If it gets very low and the market seems to be having trouble, I'm suspicious that it could roll over. And then, of course, if it drops to 1800 and the VIX goes up to 55 or 32, there's obviously some suspicion that those lows are getting a little overdone, and obviously there's a possibility of turning around. So the VIX, I think, is not a trading tool, but it can give you a general idea of overbought and oversold. And then the other thing is like I say, I've always been a believer in the transport, and these are just my opinions, the transportation average topped out the fourth quarter of 2014. We haven't seen a new high in a long time. And then the 2135 is getting very old now too, almost a year old since last May. So the longer you don't make new highs on things, sometimes the news, turns sour.
Yep. Yep.
But as we all know, it's all about the timing of it all, and clearly, being very negative on stocks, has not been a moneymaker if you start shorting after it drops. So the bottom line is what time zone might be more suspicious for stocks might be, if we don't take out this 2105 this month, and then in June you start deteriorating underneath 2000 and then 1950. Those would be some of the buzz points that I'm kind of looking for.
Okay. All right. So, but you normally try and do you scale in shorting?
Well, I think that's a personal.
Yeah,
like I say, that's a personal deal. But I mean, you have to have a lines in the sand a bit. Yeah. And 2105 and 2135 are two good lines in the sand in my view on the upside, and on the downside, 2000 and about 1920, which was like 2 months ago low, would be pretty good lines in the sand for significant activity to occur, as opposed to where you go down and everybody gets negative, and then who's on the other side of the trade? Obviously, There's some market maker taking in all the volume. That volume dries up. Now we rally it back up. Obviously, a lot of people are buying and short covering. Who's taking the other side of that volume? And if that volume has dried up at 2105, then it could be another thing where it could roll over.
Okay.
These order imbalances really, are happening more and more and more because liquidity stinks,
Yep, and it's easy for them to fake out the ranges and stuff too.
Absolutely.
All right, let's move on to Sam. Sam, what indicator influences your trading the most? And it can be a simple technical indicator that you use consistently, or you can talk about an indicator you're looking at primarily right now, or both.
Sure. So obviously I spoke about the VIX earlier. I mean, I mentioned that the VIX is mean reverting, so it maintains an average of around 20. So usually, based on the research that I've done, the VIX trades inversely with the S&P about 80% of the time. So it's a really good indicator to look at the direction of the market. Look at how high or below the VIX is around the mean average. So that's one area that I always constantly monitor. So in addition to actually trading volatility as an asset, I look at that to see what the direction of the market is. I'm also, of course, looking at corporate earnings as well, and it's a bit disturbing to see blended earnings down around 7.5% in the first quarter. Yet we're still maintaining new highs for stocks, or stocks are still well supported. So I mean, we're in a earnings recession on Wall Street, and kind of makes me a little bit nervous to see how the support for stocks that we're seeing over the past few months. But I'm still watching the earnings scorecard, especially in the technology sector. Last week was a pretty brutal week for the Microsofts and the Apples. So looking at how that influences investor sentiment is something that I'm looking at, and obviously following earnings scorecards this week as well.
Yeah. Some of the big guys got whacked last week, like you mentioned, Microsoft and Apple and Google too, right? So they took some big hits. Mm-hmm. And personally, I found the VIX to be useful as well. I like looking at VIX action Now, when I look at it, a lot of times I'll look at spikes in the VIX. Do you find those to be especially helpful, or I'm not talking spikes up, but or down really. If you get a sharp move in either direction.
Yeah, absolutely. It indicates, that there may be a trend reversal, or at least the way I see it is it's an inverse relationship with the S&P. So if you see a spike in the VIX, you can rest assured that the S&P has declined or is in the process of declining rather significantly. And I also look at the the degree of contango and backwardation in the futures markets as well. That's also very helpful. So yeah, it's a very, very useful tool. And what I like about it is it kind of gives you a snapshot of what's going on right now. So if you know the historical average, maintains an average of around 20, just looking at its spikes or its troughs, you get to see exactly what's going on right now. That's what I found to be very useful about the VIX.
Yeah, and I know we've seen a lot of strong contango lately, so that's been good for XIV and bad for VXX, right?
Absolutely.
Yeah. Another thing that I find sometimes useful about the VIX is when it does the opposite of what it should do, right? That sometimes tells you some things, right? If it goes up along with the S&P, or if it goes down along with the S&P, or something like that.
Yeah, that happens quite a bit around major fundamental events as well. Like if the Fed speak, or if there's any kind of economic indicator, we see that sometimes. So yeah, like we said, 80% of the time the inverse relationship is there, but not all the time. So definitely.
Right. All right. Thank you. Let's move on to Sang. Sang, how you doing?
Good, man. Good.
What indicators do you like the most or what indicators influence your trading the most, I guess is the question. And you can discuss now or how you see them over time.
Sure. I am not the technical guy. You give me a level 2 and a time and sales, and I'm good. So I'm a tape reader at the sort of traditional sense of the word. As you can see on my screen, I'm messing around with some of these Facebook weeklies.
Okay.
So I predominantly look at options order flow, and you guys were looking at a lot at you guys were talking about the VIX as well last week prior to the sell-off. We saw huge buying in $20 VXX calls just for the end of May. So these were weeklies that were going out to the last week of May, and they basically called the whole the whole quick move there. So watching options order flow on some of the indexes here, that gives me the sentiment read, and then finding the right sector to play. One thing that we haven't really thrown out here is this market's ability to stay up here because of the rotation that's just happening with some of these beat down names, the metals, FCX, United States Steel. A lot of these were considered dog names here. There's been a lot of buying in all these names as well. So I think that's how they're able to keep this market up. And I think we get one more rotation into the financials. So you might see some of these big banks and some of these regional banks make another leg up, and that could hold this market up and keep us up here until we test those all-time highs. I've seen a lot of index bets for all-time highs on the Qs and the SPY out to July. So, I really think we melt up here. We melt up here, and maybe later in the year, start to see some of that selling pressure. But I think the ability of this market to just rotate into sectors, hold this market up, is huge, and I'm using the order flow to show me the way.
Yeah, rotations are tricky. I remember when the first real tough year I had was 2004, and I did pretty well in the bear market. I did well in 2003, just riding all the trends. And then in 2004, I tried the same trend following methods I'd used before. And what happened to me was that it was a very strong rotational year. So every time I tried to jump on a trend,
yep,
right, it would get rotated out of, and the strong ones were not following through, and the weak ones were coming up.
Yeah, and you guys were talking about a lot of these big techs. I mean, there's going to be a lot of pissed off people when this market makes all-time highs without Apple. So if this market is able to do that without Apple, without Microsoft, or without some of these names, that's going to piss off a lot of people.
Right, and you think it could be?
I think it's definitely possible. I think it's possible that you see, that you see a rotation out of some of these big, these big high flyers here, this Apple and all this kind of stuff. Obviously, you see Amazon pretty close to all-time highs. Facebook here is still good, but they start rotating into the stronger names and leave some of these other names behind. And it's totally possible we can see all-time highs without Apple anywhere close to coming back.
Right, and you mentioned like beatdowns like FCX.
Yeah,
right?
these are names that have doubled. Like this is the only time besides 2009 where you could have bought crap names like this and doubled your money just buying the equity. This FCX was like, what was it, $4 or $5? I don't know what it was, $6 or something like that. It's trading 14 now. United States Steel, huge move in some of these beatdown. Just metal names, coal names, agriculture too. You could look at Monsanto, Potash. These names could find a rotation as well. So I'm seeing the juice slowly move over to some of these, some of these names, and that's where I'm kind of looking for opportunity.
Yeah, I'm looking at FCX. It went from under 4 to almost 14 now since January. Yeah. Yep. And that's interesting. And maybe that speaks a bit to the commodity inflation that Jim was talking about.
Indeed.
These guys are benefiting from that. So if you're going to have someone benefit from commodity inflation, it'll be commodity stocks, right?
Indeed.
And so they'll get the money when it comes out of tech and other areas that we're seeing. So interesting perspective. We could get some strong rotations here. All right, Andrew, I've ignored you for a long time now.
Yeah, I mean, I agree with a lot. I agree with what a lot of people are saying, that we've seen this rotation shift out. I mean, Carl Icahn came on the other day and said he was out of his whole Apple position, which was pretty amazing because he said it was like the greatest buy in history. And we're seeing this rotation shift. And when we saw Freeport Mac trading at $4 and $5, we saw a lot of institutional order flow in the option market. So that's what I watch, kind of tape reading on more of a swing trading than day trading. I day trade and swing trade equity options based on institutional order flow. So I watch orders from every single exchange, and I trade some stuff that not so common. And the more it's not so common, the more I think it's speculative bets. So I do look at oil a lot. I look at the VIX a lot. Now the VIX spots trading almost under 15. Watch S&P. I use the Ichimoku Cloud for technical analysis. But I mostly look at equity option order flow in the institutional market, and we've seen a good amount of put buying up here in Freeport, in Rio, in BHP, and that's why I'm actually short. And today, actually, I'm up money, and the market's up a lot because I'm short the oil names, and those are down today. So institutional order flow in the option market.
All right, interesting. So we got a couple of guys here, both Sang and Andrew, that use order flow as a large part of their decision making. So any listeners?
Indeed. What's up, Keene? What's going on, man?
I'm wearing my Sang Lucci tank top right now. That's why I'm not on.
Any listeners may want to check out that are interested in order flow. Check out AlphaShark or SangLucci.com. For me personally, I use a few different things. A lot of the work I have always done with quantifiable edges is done via studies. So I will take a look at historical price action or historical returns based on really anything I can find that's hitting extremes, or it might be a seasonality thing, it might be a volatility indicator, it might be price action or breadth or volume or something. But I run a lot of little studies, so what I do is I have a tool I created called the aggregator, and that aggregates the studies together for me and gives me kind of it's a little prediction machine. And so if my studies are all suggesting bullish, I'm generally bullish. If they're all pointing downwards, then I generally am bearish. Now the other tool I use a lot is the one I developed over at InvestiQuant. And that looks at momentum, acceleration, which are two different ways of looking at price action, and seasonality. And the tools I developed there generate odds. So we'll actually look at win rates and profit factors of the different systems, and then I look at a combined average of them. Actually, maybe I'll screen share here just quickly, if I can. Share. All right. So this is just the sheet I look at VestaQuant, and this shows for the different indices. I show we show the 4 futures and ETFs for the major indices, and then I'm just looking at a 1, 3, and 5 day estimates. So over the next 5 days, this was as of Friday's close. It said we had a 58% chance it would move higher, and it was a profit factor of 1.52, meaning if you took this trade over time, you could expect to make 50% more in gains than you would accumulate in losses on a gross basis. So this is a primary tool for me, and the aggregator is another primary tool. But this is a neat way to slice and dice it for me, and I can use. It's not just for indices. We do it for individual stocks as well. So you can just get the first SPY. It's 58% and 1.3 is the averages. All right, and you can drill down from there. Let me turn off screen sharing. And what we can do now is let's. Oh, how do I turn it off? Is it off?
Yeah, you're good.
Okay. Was it ever on? All right, so let's walk through, and I'd like to give each of our commentators the opportunity to add anything they may have neglected to talk about. You can talk about your site a little bit, your services, if you have any special offers going on right now, or anything like that. But feel free to, anything else you want to discuss. A brief end of discussion summary here. Let's mix the order up again. Let's go Sam first.
Sure. So I mean, it's surprising that we have a non-farm payrolls report due this week, and we haven't talked about that yet. So that's an interesting thing, an interesting development there. So that's one thing that I'm going to be looking at, as well as the non-farm payrolls report on Friday, and that we're expecting 200,000, but I wouldn't be surprised if it's below that, given the weakness in the manufacturing sector. So just wanted to put that out there and remind everyone that we do have a pretty big report coming out on Friday. In terms of TradingGods.net, we currently have an offer on the VIX Trader mini course. $9 allows you to access the VIX Trader for 2 weeks and learn about trading volatility as an asset. So we actively encourage people who are interested in the VIX to visit TradingGods.net and learn more about that. We release weekly webinar series on the VIX and the different ETNs and ETFs, and write daily VIX updates. So TradingGods.net is your resource for all things volatility.
Excellent. So everybody, check it out, and especially if Sam's right, we'll be a little lower this week, and the VIX will probably be a little higher, but that doesn't necessarily mean XIV and VXX are going to move that way, right? Because we have contango and backwardation to deal with.
Exactly.
Yeah. So you'll need to know a little bit more than just where the S&P is going to figure out where they're going, and Sam can help you with that. All right. Let's go to Sang.
Sure. So as I said before, we focus a lot on options order flow, and we're kind of grouping together a sort of suite of advanced trading tools, one of them being the options order flow product, and that we do through wallstreetjesus.com. And we also are connected with HFTalert.com, and that's a place where you can get, it's basically for tape readers. You can only look at one stock at a time, right? I'm sitting here trading this Facebook in and out, but there's only so much tape reading I can do here. If I want to trade several different names, HFT Alert is a good way to get reports on algo activity, program activity, large buy programs, sell programs that hit a number of different issues, and it's a good way to get access to that information very quickly to possibly make intraday trades, swing bets, things like that. So we are kind of bringing together all of these tools for our network of traders. And you can check it all out, sanglucci.com, wallstreetjesus.com, and hftalert.com.
All right. I think those websites will all go out in the summary email. So if not, they were hftalert.com, sanglucci.com, and what was the last one?
And the last one is wallstreetjesus.com. So wall and then stjesus.com. We love the monikers, man. We love the love the monikers for our website names.
All right, so we got Wall Street Jesus and Trading Gods here today.
Indeed. Very godly. It's godly stuff we're putting out there.
All right. Well, let's go to Jim, who is just a professor, no kind of god or anything.
Well, somebody's got to explain the plays if they want to throw the football, right?
Right.
So basically, Option Professor is trying to explain the plays, and that's why we have the 7 DVDs that I put the content together on, is so people could understand all the different ways, outright buys, spreads, hedging, and all the different ways you can fool the defense. And so basically, you have to have some idea of what these tactics are all about. So I try to put it together where it's understandable and where people can put it into their information bank. Just getting to the broader picture, because obviously we're talking about the very short term when we're talking week to week. There's a lot of stuff out there that's going to be very interesting to see how it unfolds between now and the end of the year, which as time flies by, it'll be here before you know it. You got the Fed obviously changing their tune from easing to trying to do tightening a little bit. Business and investment, no capital expenditures in the oil business, and across the board, everyone's cutting back on their expenditures. I don't know how you get a big growth in an economy without that. Japan obviously throwing in the towel a bit on the stimulus. And then we've got a changing of the quarterback with the election. And, you got to be a little bit concerned if you look back at 08, 2000, 92, 1987, 88, 1980, where we changed quarterbacks. Sometimes it can get a little bit destabling on a lot of prices. So as a note, I would just say keep a lookout at the lows each month on the S&P. Last month was 2026. The month before that was 1930. You start taking out the lows, now you've got some momentum, and then the story of bearishness makes sense. But if you can't take out the lows and you can't create momentum, they say don't fight the Fed and don't fight the tape, and those are probably pretty good things to live by. So
Right.
Good luck on everybody out there, and optionprofessor.com, you can pick up the DVDs at a great price if you feel like it.
Awesome. Thank you, Jim. And to be clear, you do think that some of these potential quarterbacks could destable things? They all seem so stable.
I thought Fiorini and Cruz were enemies until I saw them kissing each other. So, what do I know?
All right. On to Andrew. You got here last, so you're the last to talk.
It's all right. I like going last.
Actually, I'll be last, but.
AlphaShark.com, like I said, originated 4.5 years ago when I left the trading floor at the CBOE. Watching institutional order flow in the option market, I think is the best way to trade. I've been trading for like that for 14 years. And we have 14 educational courses on demand and DVD. We're working on creating 6 new courses. And we have 4 indicators on Thinkorswim for day trading and swing trading, and we're writing probably 4 to 6 more by the end of the year. So we have a lot of different products and SKUs. We don't have any current promotions going on, but we run an all-day trading room where we have 6 moderators trading their own capital. We have around $500,000 to $700,000 of people trading their own capital in there, and you can watch them live, learn, mimic their positions in time, and that's what AlphaShark offers. You're always available if anybody wants to ever email me about questions, concerns, commission structures. Andrew at alphashark.com. I am on my phone all the time, so feel free to email me.
Okay. All right. Now, do you moderate the room a lot?
When I started, I was there for 4.5 hours a day. Now I'm only in there for an hour a day.
Okay.
Moving on up, baby.
Yep.
The good hour, right?
First hour of the day.
All right. Well, thanks everyone for coming. Again, I'm Rob Hanna. You can check me out at InvestiQuant or Quantifiable Edges. I'll be doing a webinar in the next few days with InvestiQuant that'll teach you a little bit more about the tools I briefly showed there. If you're interested in learning more about that, just come to InvestiQuant and check it out. We will know by the end of the week who you should be listening to, I guess. If it's up, me, Sam, no, I'm sorry, Sang, and Jim will be the winners. And if it's down, then we will have to buy drinks for Andrew and Sam. All right. Good doing this again. It's nice meeting you guys that I haven't met before. And David, thanks for having me. And once again, you picked a great group to talk to.
Yeah, thanks, guys. Great show. I want to remind everyone you can go to TimingResearch.com and you can get the current or any past reports, and also the archive of today's show will be up there in a few minutes, along with all the past archives. And also go to TimingResearch.com/current survey next weekend. Fill out the new survey there and have your responses be part of the next report. And so just want to thank my guests for today: Andrew Keene of AlphaShark.com, Lucci of SangLucci.com, Sam Bourgi of TradingGods.net, Jim Kenney of OptionProfessor.com, and of course Rob Hanna of InvestiQuant.com. It's your third time hosting, I think, right? So
yeah, I think so.
Thanks for being back, and Rob told me over the weekend that he could start coming back on a more regular basis to host the show. So we'll have him back at least once a month now, I think. So and of course, hope to have the other guys back again soon. And yeah, thanks again, guys.
Great.
Thanks, Dave.
Thanks, guys.
Take care, guys.